Well, good afternoon, traders. And we're seeing a slight deterioration in sentiment coming through Asia, but it's not really too much. I think really the talking point continues to be around Brexit. It's very specific to the pound. It's very idiosyncratic on that sort of in terms of UK assets. But have a look at the pound at the moment. We're currently trading 128.32. You've got euro sterling 86.36 there, up a little bit. There is some broad euro strength. Actually, I just want to touch on the euro because there has been some talk about potentially coming out of a stimulus in Germany. This has been a talk for some time, but talk is that the CDU party under Merkel's leadership could, if the economy deteriorates a little bit more, come out with a fiscal stimulus plan and break away from the balanced budget. Have a look at euro dollar. It's obviously driving the dollar index looking a bit vulnerable here, but if you look at the euro dollar daily, I mean that looks quite attractive at the moment. We've broken through the June downtrend. We're just testing this horizontal resistance level. If we can get a break above 110.85, you're not going to see an explosive mood in euro dollar, but I think a grind higher would probably be the most likely scenario. At least, very messy price action, but probably the path of least resistance on that point would be a progressive move higher, and I think that's something we are looking at the moment. Have a look at euro NOK as well. The NOK is the weakest currency in G10. It has been for a couple of days now, and that's despite the fact that we've seen some good overnight moves in the crude price. But that said, if you look at US crude here, WTI crude, we're down 51 cents. We were up 1% yesterday, but I think in late US trade, we did hear the numbers that the API numbers, the American Petroleum Institute, their inventory numbers, which feeds into about 75% of tonight's Department of Energy inventory number. That was over 10 million barrels, or just over 10 million barrels in terms of a build. That's obviously all negative. That's why we're seeing crude prices lower, Brent prices lower on the session as well. That's obviously going to weigh on the NOK. Euro NOK all-time highs at the moment. Have a look at, if we stay on the NOK theme, have a look at NOK SEK. Breaking out of this trend that we've been, or this channel that we've been, this trading range since the last couple of months. Again, the Swedish krona looking quite attractive here against the NOK. The NOK is the weakest currency in G10 at the moment. So that's something that we are looking at. The euro against the NOK, all-time highs, something to be aware of what we're seeing there. But back to what we're seeing in Brexit, the news flow over the last 12 hours, decisively more bearish. And I think people are starting to take a bit of those short-term positions that we've been seeing. Obviously, there's been a position adjustment in the pound crosses, and I think maybe that's done its dash for now, because certainly what we've been seeing is while the Europeans are warming to the plans we've been seeing from Boris Johnson, the arithmetic that we're seeing through the Commons is looking dicey at the moment. The idea that DUP party are probably not going to be on board, the Spartans with the European Research Group may not be on board as well, despite what we saw from Stephen Baker, who said that he could put up with the deal. But ultimately, there's a lot of question marks about whether any kind of deal is going to make it through the UK Parliament. Now, we know that the EU Council get together tonight. We're not quite sure what exactly they have to thrash out, but we can hear some headline risks. So if you're holding those pound exposures, do be aware we're in that eye of the storm at the moment with regards to news flow, and just be aware of that situation as we go into the weekend. And obviously, we're going to have that sitting Parliament, and then obviously the idea there we could potentially see gapping risk as we come into Monday. It is something to obviously be aware if you're running those pound exposures. If you look across equity markets today, slightly lower. Hong Kong having a good day there, but you've got a slight deterioration in sentiment in Japan. Well, it's flat on the session, but China down 49 points. ASX 200 is down 18 points. I will say, though, if you have a look at the DAX, the German opening calls there, down 16. If you have a look at the daily chart of the DAX, we're traded to the highest level since August of last year. It looks really strong at the moment, but that said, we're just seeing a few sellers coming in line with what we've been seeing with some of the other markets. IBM did come out with some numbers after the closing bell, weighing on the Dow. If you have a look at the weight that IBM has on that market, it's about 3.5%. So that stock fell about 4% last time I checked in the after hours session. Its revenue numbers missing expectations, so something to be aware of there as well. Gold price is having a bit of a firming touch there. Obviously, last night we did see the retail sales numbers out of the US coming out slightly weaker than expected, down 0.3%. The market was looking for a 0.3% gain, but the retail control group that we saw was unchanged. The market again looking for 30 basis points there. So if you're running a GDP nowcast model on where the US is tracking in the quarter, you've probably taken that down 20 basis points or so to around 1.3, 1.4%. Not particularly great growth. Is why I think probably part of the reason we're seeing the US dollar under a bit of pressure. But yeah, do have a look at what's happening in the pound exposures. Obviously, have have an eye on what's happening in euro exposures as well. In terms of news today, for the Aussie dollar's been a bit of a mover. We did see some good unemployment numbers coming through. The market's got its focus very much on the unemployment rate. We saw that coming out at 5.2%. The market had been looking for that to stay at 5.3%. The actual level of job creation was in line with expectation, but the market's fixated solely on the unemployment rate. The idea that the RBA are targeting full employment, that's come down a little bit. So we did see the Aussie dollar spike from 67.58 up to 91. Tomorrow, interestingly, we've got GDP numbers coming out of China, industrial production numbers expected to spike up a little bit. So we're watching that dollar CNH exposures as well. So plenty going on. Brexit, the eye of the storm. Everyone, we're focused on that still.